everyone. Hey, great to have you. Thank you so much for zooming in.
Where did our TMOD go to?
Okay, let's begin. Fellow Toastmasters and most welcome guests, welcome to the advanced #Elden Speak 203 meeting. My name is Sean. I am the search at arm for today's meeting. Before starting the meeting, there are 3 ground rules we need to follow. First, please stay mute until it is your turn to speak. Second, we encourage you to turn on your camera for wonderful audience interaction if you are convenient. Third, the meeting will be recorded. If you are not comfortable to be recorded, you are welcome to turn off your camera, but please stay in the meeting to enjoy and learn as much as you can. Now, let's put our hands together to welcome our present distinguished Toastmaster Patricia Yap to the virtual stage.
Yay! Thank you, everyone. If you are excited about today's session, it's all about money and financial matters. Go ahead and do some really outrageous posts, and we would also like you to video on right now if you're convenient, because we certainly want to take a very fantastic Photoshop before we kickstart our panel discussion. All right, so I'll give you a few seconds, and to all of you zooming in today, as an incentive to all of you, by the end of the session, according to the name list, we will be presenting to you a very unique investment framework so that you can work on it and help to build your financial future. If you're excited about this, give us a thumbs up. Great. With your thumbs up and exciting move, remember, money will travel to you if you're excited, because it's all about energy. On my count, 3, 2, 1. Great. I'll be making sure that I capture all of you so that we can bless you with the investment template. Great. With this, it's my honor right now to hand the control over to our beautiful and gorgeous Toastmaster of the day, all the way now in Bangkok. And over to you, Suisin.
Thank you so much, our President, Distinguished Toastmaster Patricia Yap, for welcoming and opening this meeting. Hello, everybody. I am so honored to be your Toastmaster of the day for this wonderful event. Today, our meeting is very special and unique rather than other meetings, because today is the panel discussion. And the theme of this meeting is the power of crisis investment. So now let me ask you one question to all of you. How many of you are how many of you are willing to make more money? Please raise your hand if you want to make more money in your life. All right, I see so many people. So how many of you want to make more happiness in your life? Let me see. Wow, all right. Okay, so let's attract more money, more happiness into our life. So now it's my responsibility to introduce the moderator and the panelists for today's meeting. First of all, let me ask, are you all ready? Everyone, if you are ready, please show me thumbs up. Because you need to be ready to earn more money and attract more money into your life. So are you ready to attract more money? Yes, I love your energy. I love your enthusiasm. Let's go. Now, welcome our world leaders for zooming in, joining us for a powerful panel discussion on the power of crisis investment, where seasoned minds meet to explore how uncertainty breeds opportunity. Let me introduce our moderator, Distinguished Toastmaster Patricia Yap. She is the Capital Markets Services Representatives License Holder, Certifying Financial Planner. Our 3 esteemed panelists in alphabetical order. Panelist Beng Kuan. He is the Executive Director at Leong Islamic Assets Management. Thank you for spotlighting Toastmaster and Beng Kuan. Now, our next panelist, who is Toastmaster Michael Wader. He is the award-winning international leadership guru, keynote speaker, and author. Last but not the least, our next panelist is distinguished Toastmaster Tharmizy Razak. He is the Fractional CFO and Strategic Finance Partner for SMEs. Allow me to welcome all of our moderators and our panelists. Before that, let me tell you all this disclaimer. I hope you can hear me okay. The information shared during this panel discussion is, can you hear me?
Yes.
All right, yeah, because I lost my connection, I think. So the information shared during this panel discussion is for educational and informational purposes only and does not constitute financial investment, legal or tax advice. The views and opinions expressed by the panelists are their own and do not necessarily reflect those of the organizers or affiliated institutions. Participants are encouraged to conduct their own research and consult with a qualified financial advisor before making any financial decisions. Neither the panelists nor the organizers accept any liability for any loss or damage resulting from reliance on the information shared in this session. Let's put our hand together to welcome our moderator, distinguished Toastmaster Patricia Yap, and her esteemed panelists.
Thank you so much. Certainly a big round of applause to all our world investors. The world is borderless now, so if you have the investment knowledge, you can actually invest wherever you want to, but this is the trick. But coming to an investment background, investing always comes with risk. And crisis is actually a moment that allows us to understand ourselves better. If you are able to know your own risk profile, you are able to turn crisis into opportunities for investment. And that is why we have decided to host this panel discussion. Just a quick check to all of you. Do you know there's a buzzword right now that starts with a T for the past many weeks? Who can let me know what the buzzword is? Starts with a T.
Tariffs.
Yes, tariff is the word of the world right now. And because of tariff, we have decided to come up with this panel discussion so that we can, from the perspective of a Toastmaster, which propagate growth mindset, we can do as much as possible during this time of crisis. Great. We are going to discover how we as a daring Toastmaster navigate this disruption and hopefully spot hidden potential, at the same time turn crisis into catalyst. But at the same time, we also want to educate all of us that we keep on top of our risk profile. So every time when you decide to invest, you know what you are doing. This panel discussion is going to be very educational and informational, as mentioned earlier. With this, I'm going to kickstart by asking my panelists their investment background. I'm going to start with a very easy question. I'd like to find out at what age they started investing. I bet that has to be before they even became a Toastmaster, right? So let's kickstart with BK, of course. BK, our executive director from Hong Leong Asset Management. What age did you start to invest?
So thank you for inviting me to the panel. It's great to be here. So basically, at what age I started to invest is basically I started at very teenage years. So basically, my parents were the ones who helped me to save, but they weren't very much a risk taker. So essentially, is that most of my savings are parked in a very safe haven deposits. But essentially, when I start learning about investing and trying to look up about investments, right? So I started quite actively back in after my graduate years. So basically,
Wow.
when I start working there. So that's how I started with my investment journey there.
Okay, when you graduated about 20 something?
No, I wasn't graduated that young. I don't
Oh,
look.
wow. Okay.
So basically,
All right.
so yeah, it's around like I started investing about at the age of 24, 25 years old.
Oh, okay. Not too early. I thought earlier, but let's find out from Michael. Michael, I kind of have a figure you started investing at a very exciting age. Let us know.
I started investing when I was 48 years old.
Oh,
And that just happens to be 29 years ago. So I'm not a young man anymore, but I can tell you that once I started investing, I invested in myself. And part of my investments was not just putting money in the bank, but signing up for courses and classes and lectures and conferences that I knew was going to grow my business. So instead of putting the money into the bank, I put the money into my education to continue, and it has paid off tremendously.
I love this. In fact, now we are in this AI world. There are so many opportunities for us to invest in ourselves through the internet, social media, but be very careful because there are so many scams around. Now, talking about scams, I can see Tharmizy laughing already. Okay, but before that, I am also very excited to find out, Tharmizy, at what age you started investing, putting your own money into whatever instrument you want to?
Thank you, Patricia. Well, Michael just stole my line. I don't really have much investment in monetary terms, but I try to invest on myself. I think that's the most important thing. To be honest, I just recently started a couple of years back, started investment because I realized that investing, it is very, very important, right? So with that, I also dwelling myself into become an angel, right?
Angel, what does that mean? Give us more.
An angel is an investor who provides a bit of money, a bit of capital to new companies, new young startup, so that they could start off, right? So, and I think the good thing about being an angel, trying to be an angel, is that you get involved from the early stage and get the platform correct. So,
wow. Angel Tharmizy, thank you for giving us that option. But do you have to be a multimillionaire to be an angel?
No, not necessary. Not necessary.
Okay.
You do not need to be a multimillionaire.
That is a myth, right?
Yeah, that's
That
myth.
is a myth. You don't have to be a multimillionaire to invest in an angel. If you want to know more, please stay back because there are so many important investment principles that we like to dwell upon. Certainly, I'd like to come back to Michael. Michael, I know you are very hardcore on self-learning. In fact, I bet you must have spent millions and millions in your self-growth. Certainly in line and aligned with Warren Buffett, who believed the best investment is always investment in yourself. So Michael, give us some tips to all our audience here who are very new in money management, financial management. How should we start? What sort of course we should invest?
Well, I'm going to just go back in history just a little bit. I'm going to take you back to COVID. And in the COVID time, people were asking me the same question when COVID came. And so many companies were starting to struggle and their sales went down and they didn't have the revenue they had before. So therefore, they were all struggling. And they asked me what they should do. And I said, now is the best time in your company's life to invest in yourself right now, because you don't have the customers. Your people at work are not so busy. You're not so busy because you don't have so many sales to make. Therefore, that idle time, spend it on yourself. Look around you and find out how can you make your process better. Today's world, where would you put effort if you were going to improve your company today? For me, I would tell you to look into AI. You don't need to be an AI expert, but you can go find out how AI can shorten some of your tasks. You can get more done. When you get those skills now during this crisis time and sales are down, guess what's going to happen when sales go back up? You're going to be ready to explode. You're going to be in a position where you're going to be able to handle a lot more money, a lot more transactions. But you need to think about putting the focus on you and your educational skills whenever the market goes down. Market goes down, don't draw your money out. Just put your money over in training and keep going to improve your training. That's what you need to do. And that's coming to you from not only myself, but advice from several different people. And similar to my brother, who is now 85, he's doing well, very, very well, because he put his money into the American stock market 20 years ago. And he always told me, every time the market goes down, freeze. Do not sell anything. Just freeze and hold on. Because where's the market going? It's going to go higher when it recovers from where it went down. So that's what I'm expecting here in Malaysia. I'm expecting that here in Malaysia, we got these tariffs put upon us. I'll share later on a couple ideas how I can help you, not that I can help you, but how you can help yourself in order to increase your future if you do a few things. But it's all about you. It's all about you focusing on you and holding tight, because the market will go back up. It's not going to crash. It's not going to go to zero. It's going in the right direction eventually.
Wow, thank you so much for the breaking news. Even though we see stock market having a meltdown for the past, but today actually rebounded. The KLSE is up 21 points, which is pretty good. And for all of us out there, if you have not invested yet, yes, perhaps this is time. But before we really invest, we always talk about, okay, I'll leave this cash flow to some expert here, but I'd like to hear from Beng Kuan, because Beng Kuan manage millions and millions of investment fund, right? So Beng Kuan, would you like to touch on the basis of how we deal with our own emotions? I just want to sidetrack a little bit, because investment, we can't run away from fear, F-E-A-R, and certainly greed, G-R-E-E-D. So Beng Kuan, from your experience, you deal with so much money and even billions of ringgit and USD. How would you give us some tips? How we should manage those human emotions?
I will be agreeing with Michael here that there's a saying like formal education will make you a living, but self-education will make you a fortune. So essentially is that what we have, I mean, most research has shown that basically, if you continue to stay invested, right, not move your monies too often, right, then basically you earn more than those people who have been in and out of the market for several times. That is because the fees, the transaction fees, and the switching fees will tend to eat up your returns bit by bit, and they can be cumulative and compounded as well. So basically is that you want to continue to stay invested in the market, as Michael has mentioned. In terms of biases, right, what we need to look at is the different biases of regret aversion biases, and also some of the loss aversions itself, is how we frame it. I mean, I remember reading a book by Richard Kahneman, that basically the most important thing is to look at the different ways of how we frame, whether you would win a 20% returns versus a loss of 80% of your investments. It's just a matter of framing. And once we identify different biases in terms of cognitive biases and emotional biases, especially in this greed and fear environment, right? So we may be able to be somewhat above our level heads and not get caught in our emotional and also cognitive biases. As long as we continue to stay vigilant, continue to stay aware and in control of our finances, right? Then basically, right, you will know what to do during these moments of crisis. Over to you. Thank you, Patricia.
Thank you so much, BK. Now, I really like BK's, this is $1 million advice, because BK just mentioned one aspect that we should keep on developing is really having that emotional discipline. And what do I mean by that? Emotional discipline, you can sort of detach yourself from the fear and the greed, so that you can observe and you can evaluate the whole situation from a very objective point of view. This is tough, because when money is involved, especially when you're invested in the money, then emotional comes along, right? Emotions. So this is why I learned even from my past many years as a stockbroker, those investors who are very successful, they always are able to practice emotional discipline. And I love the fact that Michael actually touched and also elaborated on his very successful brother who built himself up successfully financially, right? So Michael, perhaps you can share with us what are some of the quick tips and principles when we talk about investment, particularly crisis investment.
Well, that's a good question. If I knew that, I'd probably be very, very rich. but the idea is, though, you find things that you rely on. You know, both my brothers are very wealthy now because of the stock market, but they're very, very old. And what they have been telling me over the years, because I'm the baby of the family, they said, you know, Michael, when you find something you like, hook onto it and stay with it. Don't give up. Let's just take an example. You have a very large company and you got two small companies. The very large one grows very, very slow, very methodically, little bit by little bit. And the young ones are saying, oh, they can pop up here, they can pop down there. Guess what? Those young ones are much more likely to go down than the steady one who's going up slow, slow, slow. So when they put money into the market about 30 years ago, their investments were in large, solid, well-known companies. When they did that, they were told, don't touch it until you're 65, which they didn't do. And by the time they were 65, now they had 7 figures because they just let it grow without taking it out. Should you try a light one? Absolutely. I've seen some exciting stocks come out there. Few years ago, it was all about marijuana. I don't know what it was about in Malaysia, but in America, marijuana was really it was really popular in the 1990s. The people who bought stocks in marijuana companies in the 1990s have done very good in the year after the year 2000. Those stocks shot up like crazy because what happened? They legalized marijuana. What looked like originally like a crazy idea was not so crazy, but they didn't put a lot of money into it. They put a little bit of money into take a chance. And that's what you have to do, in my opinion. Find a rock solid item, stay with it. And when you got a little extra change in your pocket, try a few of those smaller ones that you think don't know where it's going. What's an investment? You're just like around here. If you would have invested 15 years ago in an AI startup, where would you be today?
Yeah.
Yeah, I think I would agree with Michael here. Maybe I can add in a little bit, and maybe Tharmizy likes to add in on the cash flow when we look at investment side of it. So basically, consider your savings as, I know that you should not kind of like bucket your investments or your savings because it's fungible anyway, right? But as a personal investing person, right? So basically, you tend to bucket your most safest deposits, investments, right, into very secure companies that have household names, right? For example, Coca-Cola, right?
Oh my God.
Warren Buffett has been investing in Coca-Cola, right? And everything, right? So it's all about consumer staples, right? So you tend to look at certain household names that you tend to use a lot. These companies tend to be very secure, very stable. They are boring, yes. Their cash flow are not so interesting, and they don't have super kind of revenue growth that would attract anyone, but basically is their stability in terms of their cash flow. I would ensure you that you got stable returns that would sustainably grow as you age until you reach your 7 figures, as Michael has mentioned.
Wow. Thank you so much, BK, for the feedback. I bet some of you are now also reflecting and thinking about your own investment experience. You may have some questions now, so feel free to type your questions in the chat box as well. Susie will probably pick it up later. But having said that, thank you so much for our panelists. Now comes to the very, very important question. It's all about cash flow. Okay, for this cash flow issue, I'm going to turn the mic over to Tharmizy. Tharmizy has dealt a lot with cash flow, and he also helped the small, medium enterprises in Malaysia, which happen to be the backbone of our entire economic system if you go through our country and all that. So I just want to find out from Tharmizy, from an individual point of view, Toastmaster like us, let's just, for instance, starting out, how would you advise we design a cash flow that suits our own investment need?
Cash flow from our own investment.
Individual point of view,
Individual point of view.
Yeah.
Okay, cash flow, let's be honest, cash flow is king.
Oh,
is king.
Cash flow is king.
Yeah. The first thing that we really need to understand is how much cash do we have and how much cash we are generating. If we are a salary earner, don't worry about it. We have already started our investment the day we started registering ourselves in EPF. If you look at what Warren Buffett has said about investment and compounding, right? In Malaysia, to be honest, I'm being very honest, the best investment is EPF, KWSP, and Tabung Haji. Stable, slow, and steady, continuous growth, and compounding. That's the most important factor in investment, which is compounding. Right. So that's on a personal basis as a salary earner. And if you want to delve into business, right, where you want to double up your money and you have extra fund, well, cash flow is important. This is where you got to learn. You must actually master the art of making money. Unable to do that, might not do business, stay as a salary earner. I am being very frank because a lot of business which I have already accounted and engaged, this is where it is very important. Are you able to generate cash? Because if you are unable to generate cash, you can only last a couple of years. So that is the most important thing. So us as leaders in Toastmaster or for in general, if we intend to delve in business, start a business or invest, start with the model. That is the most important thing. If we
Wow.
do not start with the business model or the fundamentals, we are going to suffer in the long run. So that's my take. Concentrate on the fundamentals. And of course, as what Michael said earlier, learn to improve, keep investing in yourself. Then you start to invest.
That is so cool. Thank you so much, Mizi. Now, Mizi, after listening to your thoughts, that triggered me to think of some of the skills that we picked up in Toastmasters that allow us to be a great investor. This question, I would like to throw it to all the audience there. What sort of skills that you learn in Toastmasters that allow you to be a better investor? And of course, for this question, I'm very curious to find out from Michael, because Michael almost completed all his 11 paths. So Michael, of all the 300 skills, right, my beautiful audience, please keep overwhelming us with the skills that you learn in Toastmasters that you can transfer it into a money-making skills, right? So Michael, I'd like to find out what is the number one skill that you learn in Toastmasters that allow you to become a better investor?
Time management.
Oh, time management. Listen to this. Time management. Okay, please elaborate.
I know you want to know. I know you want to know more. Absolutely. And timing, what you don't think about, is a fact on investment. When do you invest? Do I invest every week? Do you have a Saturday morning where you get up in the morning at 6 o'clock and have breakfast and go exercise and then sit down at the computer and say, let me look at what I'm going to invest this weekend and put something in? You could do that. That's okay. But on the other times, there are days when somebody gives you a tip and says, you know what? This stock just got a new CEO. This stock is going to be turning around. This stock's going to be going in the right direction. You might want to try it. If you wait till by Saturday to make your investment, it may be too late. You need to do it now. And how does that relate to Toastmasters? Toastmasters, first of all, get away from the, and you're going to love this, Patricia, get away from the la mentality.
The
la mentality. You may not know what that is. That means
Please
that, oh,
elaborate.
it's okay, la. I'll do it Saturday, la, or I'll do it later, the la. You know, it's okay, la.
That's a good one.
You get in that relaxed mode of a la mentality, and you're going to miss several good bargains. You're going to miss several good opportunities. When opportunities come by, they may not come back. If you don't get up and dance with that opportunity when it arrives, it's going to pass you up and get somebody else to dance with. So you need to think about being on time. Be on time for Toastmasters, be on time for investment. Time management is one of the most critical skills we teach when we're teaching leadership, which I've been doing for so many years. That time management. If you manage your time, you will have time for you to go to that extra class you wanted to go. You will have time to make that extra sales call. You will have time to spend doing a little bit of research if you manage your time. So I think time management is an important part for Toastmasters and investors.
Whoa. Wow, that's amazing. And I hope this encourage all of you to please volunteer yourself to be a timer. Because once you're a timer in Toastmaster, you can appreciate so much more. But time certainly is a great factor in whether you're going to be a successful investor or, an investor who doesn't perform. But I'm also curious to find out from BK and Tharmizy, well, the rule of the game is you can no longer pick time management as the greatest skill. I'd like you to share with us what is the greatest skills that you picked up from Toastmasters, whether it's a Pathways education program or your journey as a leadership. What is a skill that you picked up from BK and followed by Tharmizy, of course?
Okay, so basically what I do learn is about in these financial services or any services that we are involved in, right? Trust is number one, right? Also for financials, right? So essentially is how you are able to convey and convince about your views and your opinions about the market to the people, right? And whether the audiences truly buy in your views, right? And essentially, this is where Toastmasters comes in, and Toastmasters helps you to build that necessary confidence, right, to articulate your views, your opinions, and your strategies, right? Because what you know is that, yeah, making money for yourself is good, but helping people along the way, right, in achieving their financial independence, their financial objective is also quite crucial as well. And we don't want to let our immediate families, our friends get caught into investment scams, right? Whereby it's a promise of more than 20% returns, which is very idealistic, right? So it's trying to teach and also trying to advocate for financial literacy. And that's where we all come here, right? I mean, Michael, Mizi, yourself, Patricia, we all here to educate and also to advocate for financial competency and literacy, right? To avoid investment scams, which we have known, right? I'd just like to share, right? Just a few years back, my missus, my wife, also almost got scammed for a savings account. So basically, she just picked up a call, which is an automatic machine telling her that she has outstanding bills with a police. Then when she continued on the call, they try to wiggle her way, trying to instill certain lack of confidence by trying to talk to her, not to communicate with other people. Then basically is that with the intervention of myself and she managed to open up, then only then she realizes it's an investment scam. So that kind of financial literacy is very important to try to educate people that don't always fall for these return temptations. And if it's too good to be true, it really is too good.
Yeah, couldn't agree more. Thank you so much, BK. I really resonate with you. One of the biggest skills we can learn as a Toastmaster, that ability to communicate authentically, and that allows us to build trust with certainly our loved ones, our stakeholders. And just for your information, BK is a frequent guest in our Business FM 89.9. If you haven't heard BK before, please Google him. He's a frequent guest talking about financial literacy and certainly giving our audience a lot of extra guidance and certainly wisdom as well. Thank you so much for your tip. Building trust and having that persuasive and authentic communication style certainly allow us to help our loved ones and help ourselves as well. Mizi, I know you have something different. So over to you, Mizi. What's the biggest skills you want to advocate now as a Toastmaster?
The biggest skill of that I got from Toastmaster is just being a Toastmaster. Be honest.
Okay, wow. Okay, that's deep.
Right, because I started out. Before I joined the Toastmaster, I'm a mere accountant who sits at the corner of a desk. Right, I have so many stuff inside here. I know things are going on. I know things are happening. I don't things that were right or wrong, but I couldn't articulate myself. So when I became a Toastmaster, I was able to articulate my thoughts and my processes. I was able to make pitches to investors. I was able to persuade, or I think my best performance, I think, was be able to inform a GLC that their company is facing losses, and they say, okay.
Oh my God, breaking the bad news.
that was I believe that's the skill that I got from Toastmaster, especially in financial investment. And I believe with the skill that I have got, right, I realized that I have a value that I can spread it out. Right, I have this knowledge, I have this experience of going through hell, especially in financial management. And with Toastmaster, I was able to articulate and convince that this is the right way. Do not do this. Do not screw up your company. Do not screw up your investment. This is how you need to do it. Right, that's where I learned. So means, right, being in a Toastmaster member, being a Toastmaster itself, is the skill that has helped me to become this person. Else, I would sit in the corner, mumbling, grumbling.
Yeah.
Right? And I was able to come out of my shell and become able to advocate on doing things right, go back to the fundamentals. That's why I'm advocating. In investment, in financial management, you got to go back to the fundamentals. And if you look at what's happening at the moment, and I totally agree with what Michael said, do not panic. Stay calm. Right? Things will improve. And it is currently improving.
Yes.
I remember you, Mizi. You know, a few days back, I was in a very panicky mode because all of a sudden, oh my God, KLSE has never before had such a huge meltdown. And I was bombarded with all my clients practically literally complaining to me over the phone. And they were they were in such a fearful state. But remember, I talked to you and you told me, hey, Pat, you know what? The storm will eventually settle and the storm will stop.
Absolutely.
So even me, myself, I'm in the market, I'm in the jungle. Sometimes I was overwhelmed as well. So from Mizi, I just also kind of gave me an aha moment. It's so important to stay close to your community who is able to give you the support, who is able to give you that very sound advice, who's going to pull you rooted wherever you are so that you're going to stay calm regardless of the big storm out there. Thank you so much, Mizi. And of course, another quick aha moment that I picked up from Mizi, learning to be financially literate or competent is a journey. It doesn't come with just, we attended this panel discussion. Tomorrow I can buy whatever shares I want and I'm going to be a multimillionaire. I'm so sorry. This is not a quick, rich scheme. I just want to share with you the only reason why we are doing this. We are so passionate and we just want to keep everybody be on really high alert. Opportunity is everywhere when crisis is in. Because according to Warren Buffett, a lot of the majority of the people, they are all bad decision makers. If you do a statistic, majority of them are all losers. The winners are very few. So what can make you become the winner? So certainly it's the character, it's the decision making, and it's that ability, that emotional discipline that you have for yourself. Now, because of this, we are certainly going to share with you the very, very, I would say, a very basic, fundamental principles that we have shared, all right, from Toastmasters, how we can pick up certain Toastmaster skills. But now I'm also very excited because I know a lot of us are all readers. Okay, readers are leaders. How many of you have heard of this? Readers are leaders. Okay, great. I have a few hands there. Okay, with no hands, please stay tuned because our panelist is going to share with you one book, just one book that has changed the view on investment or even personal investment. Let's start with, okay, Michael, you'll be the final one to share, all right? Okay, we'll start with BK, followed by Mizi.
So I would like to share a book called The Rich Man from Babylon. So it's about a scribe that is from a lowly, humble minutes taker to a very rich scribe. And he teaches a couple of parables, right, of how to get rich. And he uses a lot of metaphors like how to save gold and how do you do with the gold, because back in the Babylonian wealth, right, gold is the currency, right? So essentially is that is one of the good parables that the rich man of Babylon can at least maybe guide all of us, has a new, and it's a very light-hearted reading also. It's not too heavy, nothing to do with very advanced mathematics or econometrics. Over to you. Thank you.
Okay, The Man from Babylon. Yeah. Great. Mizi, yours. Your recommendation.
Of course, it's a book by about Warren Buffett. I think just let me quote him.
Warren Buffett?
Yeah. Be fearful when others are greedy, and be greedy when others are fearful. Okay. From Warren Buffett. And the book that I recommend are actually two books. One is Smart Investor, which is the guru to Warren Buffett, right? Warren Buffett. Okay. Yeah. And I think this is my go-to book, right? Warren Buffett, Understanding the Interpretation of Financial Statement. So now you understand how do you value a company. At this moment, right? Shares are going down. This is the time for you to buy. Look for company who is undervalued. Yes. And have fundamentals.
And what do you mean by undervalue? Let me just go a step deeper.
Because the stock market is supply and demand and perception created by the market themselves. Some companies which are very stable, but their share values are not, share prices are not as high as the other companies. They are undervalued assets, undervalued shares. So those companies are usually what Warren Buffett targets. Very strong, very stable, slow growth, although it's slow growth, but consistent, with a track record of at least minimum 5 years. Minimum 5 years. And that's where Warren Buffett looks. He particularly pays attention to the cash flow.
Yeah.
Cash flow.
Yes. It's all about cash flow to stay safe, right? That's one of the reasons why we want to stay safe. But of course, I think for some of the audience, if you're in for higher risk appetite, we don't have any particular advice to you, but my advice would be to review your own risk profile so you know what you're doing. If you're in for a higher risk profile, like risk appetite, perhaps you want to think of how much you're willing to lose before you even think of how much money you want to make. That would be a good guidance for you. You can still sleep sound you can still sleep soundly. So you go ahead and invest, all right? Of course, I'm talking about particularly about Bitcoin and all the digital financial investment that you're going to come up to anyways. All right, great. Thank you so much, Mizi. Now, I'm also going to, of course, find out from Michael. Michael is a reader for sure. He has read thousands and thousands of books. So, Michael, what is the #1 book you would recommend?
Well, I don't have the #1 book here, but I have a very good book here. And the good book here is, I wrote it in the chat, Good Leaders Ask Great Questions. Good leaders ask great questions. And let me phrase that a little bit different. When's the last time you asked yourself a good question? By that, I mean what you just said. Let's not worry about how much money we want to make. Let's ask ourselves, how much money can we afford to invest? And if you're going to call some financial advisors like you three that are on the screen, because I'm not one of them, when you're getting ready to talk to them, did you write down your question that you're going to ask that financial advisor ahead of time? That's what good leaders do. They figure out the question that they want to go get an answer to. They go back to their office. They write it down with their own hand. They read it back to themselves. And they say, does this question make sense? They're using their senses. And that's what you need to learn to do if you want to be a good leader. Doesn't matter if it's in Toastmasters or anything else. In Toastmasters, if you're going to give a good speech, read your own speech and see if you like it or not. If you don't like it, why are you going to give it? The same way, write your question down. You're going to ask Patricia or BK or Thursday. Write down that question. If it doesn't make sense, don't ask it. Think about what you're going to ask ahead of time. And then when you get them on the phone, you've got a good dynamic question that has some sort of an answer that you don't know and you want. They're going to be able to help you. So I think leaders who can really write good questions, they're the ones who are going to be the best. They're the ones who are going to be the most successful. You got to know what you're asking when you ask for help. You just don't say, hey, can you help me? Somebody says, well, what do you want? And you say, I don't know. What kind of answer is that? When you ask for help, you should be able to very distinctly say, this is my question I need answered. You do that, and you're going to be much more successful. I put the title of the book in the chat.
Love. Ask good questions, right? Questions that are going to allow you to have better clarity on yourself. So I'm going to ask you guys a very good question. Are you ready for this? By the end of the session, I'd like you to ask yourself where I am financially. Do yourself a financial statement. What are your liabilities? What are your assets and your equity? A very simple model so that you can assess yourself where I am now. From where I am now, I would like to achieve certain goals in my life, perhaps 1 year, 3 years, 5 years down the road, and how I'm going to bring myself from where I am now financially to the next level. With this, it's been an honor to share with you so many insightful tips. But hey, we're not done yet, because I'm going to ask my 3 panelists to give the final take-home message to all of you so that you can have some take-home message and start thinking about your financial life. A lot of us always avoid, but let me tell you, even though you are single, you are not married, you are married, you're not sure, you're in between, everyone, you need a financial life plan. To kickstart, I'm of course going to go to Mizi. Your take-home message to all of us.
Well, my take-home message is you can't learn financial in 1 minute or in one session. It's a process. My suggestion to you, increase your knowledge, keep learning, keep investing into yourself, and that's the first investment that you're going to make.
Awesome. BK?
Hey, in this crisis, right, I think self-leadership is a very most important thing to keep your composure, especially when the markets is tumbling. And most importantly is that in the investing world, they don't tell you that borrowing is good. So don't follow fad or fashions, but always look for stable companies and always continue on your self-development. Learn new things, even though that new investing strategies or new securities may not bear any fruit for you right now because it doesn't fit into your risk appetite. But who knows, right? One day cryptocurrencies could be the digital currency of the world.
Wow. Thank you, BK. Michael, what say you?
Thank you for the opportunity. When you have a crisis in your family, how do you show your family that things are going to be okay? If you're the parent or you're the spouse and your spouse or children are having problems, what do? You go over, you give them a nice warm hug, and you hold them and you tell them what? You tell them everything is going to be okay. I want you to treat your stocks the same way you're going to treat your family. During crisis time, during COVID, a lot of shaky things happened, but afterwards the market went up. Right now, tariffs are in here causing a lot of problems. Things are a little bit shaky. Don't worry. Hold on to what you got. Don't run away from the market. And then as it turns around, you're going to be moving forward and doing better. Put your arms around those stocks and say, you know what, stocks, I love you. You're my family. I'm going to hold on to you. And we will survive this together. And you've heard that from the other two guys also. They said the same thing. The other two panelists both said, hold on, be careful, and just wait. Things will get better. So you don't have to only track. If anybody here in the Malaysia market is curious about stocks and they think that there's problems going up and down, go in the history of the United States stock market, the Dow Jones. Where did it start and where is it at today? Through the wars, World War I, World War II, through the crisis, through change of presidents, through presidents getting shot, through all kinds of things, what's the stock market done?
Yeah.
And that's going to happen in Malaysia. So hold on, love those stocks like you would love your family. Things will be okay.
Thank you so much for all the powerful sharing. End of the day, it's all about we being a leader, able to take accountability, responsibility for our own financial life. And this will not happen if we are not willing to step out of comfort zone to learn more. So if there's the biggest buzzword today, not tariff. It's never tariff. What is the buzzword? It's learn. When you learn, you get knowledge. After that, you're also able to apply what you learn, right? So whatever it is, keep learning and apply what you have learned into a real life. And that's where you're going to hone your financial skills and become the next best version, having a better happiness. And so, because happiness, sometimes you do need a bit of money, right? To go to a nice restaurant, to buy something that you don't have to look at the price tag all the time. You know, have you been ever in a situation where I want to order something, but I always look at the price tag? Look at the price tag will determine what I'm going to eat. And how fascinating if you are able to just escape and not having that concern in our mind, but this requires us to take charge of our own financial life. With this has been an honor to serve as your financial panel session master, and we are so grateful to all our super esteemed panelists, I'm so touched and at the same time a little nervous because this is a big topic, and I hope all of you will somehow have your own takeaway. Remember, crisis is a time for opportunities. Warren Buffett mentioned crisis plus courage probably is your financial success. But to make that happen, we got to equip ourselves, have the self-confidence. All right. So thank you so much for all of you. And now we have a lot of questions on the way, right? So I'm going to actually, I'm going to for sure ask some of you to let us know your biggest takeaway right now. Well, I asked this question on EPF. Okay, there's a question on EPF from one of our audience. I will pose this question to BK. BK once upon a time was also serving in EPF, our Employee Provident Fund, the biggest fund house in Malaysia. So EPF, this is the question to you, BK. EPF versus EPF approved unit trust. What is the balance to achieve between these two financial instruments? Is it one automatically better than another one? Do you know what I mean? EPF and EPF approved unit trust. Which is better?
Yeah, that's a very good question. So just a little bit background on Employees Provident Fund for our international listeners and audiences. So Employees Provident Fund is a defined contribution fund similar to like 401k in the US, right? So basically is you contribute, and the employers and the employees contribute a minimum statutory requirements of their income or revenue earned from their salaries or their contractual employment into this fund, and this fund will invest for you up to a certain retirement age that you will be able to withdraw. So that's a little bit of brief background on what EPF is about. So the question is EPF versus EPF approved unit trust funds. So it depends, because EPF just before COVID, right, for just a little bit of background, that basically EPF introduces that members of the fund is able to withdraw a portion of their savings in the fund itself to invest in the unit trust funds. So basically EPF itself is an investment vehicle already for all employers and employees, right, to contribute already, right? Those in formal contractual jobs, right, to contribute to the fund. So essentially is that the fund itself, right, is kind of like a very diversified already. So it has a mixed assets that invested for the long term, for example, equities, bonds, real estate, private equities, and whatnot. So when you look to deviate from the fund itself, I mean, if you're looking for a strategies that is according to your age or your investment horizon, whether you're a risk taker or you're risk averse, so basically you tend to look at basically other funds outside of EPF itself. So say, for example, you're in your mid-30s, just like Michael, right? That you are young, you are able to work, and you are still have a long way of in terms of your investment horizon till your retirement. So you would like to be more aggressive of investments. So what do you look? You look for investments outside of unit trust funds or EPF, right? In unit trust funds that you are able to diversify to meet your aggressive risk appetite, right? Or maybe you're 70 years old and your equities is not your thing given the volatility. So basically is that you would want to have more income generating kind of investments or unit trust funds. So that's where you go into unit trust funds that is able to distribute more frequently for your income lifestyle needs.
Thank you. So it all depends on your financial goal and your financial need. Thank you so much, BK. Now, because of time, we are going to keep the questions later on after 1:30. And now we would like to appreciate all our panelists and certainly all of you. So what's going to happen next is Shan is going to play the slides to extend our appreciation to all our panelists. And at the same time, we'll be taking a group photo. After that, at 1:30, we are going to continue our questions. In fact, we have many, many questions on the way. So please stay back. And as I mentioned before, if you can't stay beyond 1:30, it's okay. We will certainly send our financial framework to you so that you can kickstart your financial plan if you haven't done so. So with this, let's check with Shan. Are you ready to play the slides?
Wait a moment. Just wait
Yes.
a moment.
All right. So while waiting for Shan, I would like to hear from all of you. What is the one word that you take away from today's session? It can be anything. Self-confidence, tariff, whatever it is. Please type it in the chat box. Shall we? Okay, I'll give you a few minutes. No, a few seconds, all right? To do that, okay? So, okay, I'll give you a few seconds. You don't have to type it now because I want to do a Zoom bomb to make sure everybody's still right awake. Because when you talk about money, attention will come to you when your attention is there on money, all right? Okay, 3, 2, 1, let's bomb the chat. What is the biggest word that you learned today? Opportunities, we heard from Shin. What else? Go, go, go. Crisis is the time for opportunities. Hui Ying, yes, go, go, go. Okay, good. We're going to impress everyone. Thank you so much. All right. Keep it coming, and we are so grateful to all of you taking charge of your own financial life. We're so happy. Take risks. We have Janet. Great. Keep it coming. And now we would like to certainly spotlight all our panelists and yours truly as well to take a photo as a remembrance, all right? Because this only happens once in a lifetime. That's it. We thank you for you spending your life with us. We almost had 60 minutes of your life. We are very grateful. Good. Let us spotlight all of us. And Mizi, yeah. All right. Can you take the photo, Shan?
I can take a photo. Just look here. 1, 2, 3.
Okay, another one with
photo.
A double thumbs up. Yes.
Just wait a moment.
Thumbs up, a lot of money, right?
1, 2, 3. Okay. Another PPT. Just wait a moment.
Another PPT, yes. We want to acknowledge our role players today, Shan, Sui Sing, Hui Ying, and of course, Kok Fo, our distinguished Toastmaster. Please turn on your screen. We want to acknowledge you and thank you so much for serving as my evaluators as well. All right. I think we can do that together with the panelists, right, Shan?
Yeah.
1, 2, 3, 4. Yeah. It's less than 9 of us.
Okay, no problem.
Good.
Patricia,
Okay.
I think there is a mistake on the slides. Management is incorrect.
Oh, yeah.
Oh dear. I missed the A. Okay, let's see what we can do, okay? I can do some magic with AI now. That's why I love AI. All right, everyone. No matter what it is, we'll still take a photo with the AI assistance. We will fix it.
Okay, and Hui Ying are not in the screen.
Hui Ying, are you in the screen?
Yes.
Can you spotlight Hui Ying?
Okay, and the Sui Sing. Okay, we got everyone. 1, 2, 3. Another one. Just wait a moment. 1, 2, 3. Okay.
Thank you so much. Thank you. On behalf of Advanced Hashtag Other Speakers, we thank you. And most importantly, please stay back after 1:30. This is the time we're going to answer more questions. Our panelists have decided to stay back 15 minutes, all right? Just want to let all of you know, time is money to all of them. In fact, Michael charged by the hour. I'm so honored he's not charging me. And being a financial CFO, you know, Mizi's time is so expensive as well. And of course, VK, he works in asset management and he goes by the millions, okay? Okay, good. Now we're going to start by asking some questions that I had. And Sui Sin, thank you so much. Sui Sin, would you like to read out the questions in case I missed any? So maybe you can just quickly do question 2, paraphrase it, make it a little shorter. Let me see. Okay.
We cannot hear Sean. We cannot hear her again.
We can't hear her. Okay, never mind. I will start. That's okay.
Yeah.
How true? How true? Okay, I'm going to ask this instead. Okay, how true is the phrase, don't put all your eggs in one basket in terms of investment. How true it is not an easy question to answer. How true it is. BK, how true it is. Don't put all your eggs in one basket.
I can give my views, but maybe Michael and Lizzie has some other views on don't put your eggs in one basket. So
Yeah,
I think,
go ahead, BK.
Yeah, BK, you will just speak for like 10 seconds, okay?
Yeah, so basically is that always don't get too encumbered with naive diversification. Always know what you're investing. Naive diversification is you put everything at the same percentage of your allocation. But basically is that you have to identify what kind of assets based on your investment horizon as well as your risk appetite. I mean, that's a short answer to a very long question.
Okay, thank you.
I'm sorry?
Michael? How true it is.
Yeah. Well, it depends on if you're the Easter Bunny or not. Because if you're the Easter Bunny, you've got a basket full of eggs and all your eggs are in one basket. So that might be a good thing. But what happens if you trip and fall? If you trip and fall, now all the eggs are going to break and nothing is going to be there. So do you keep the eggs in the basket? Yeah, most of them. Do you put some on the side? Yeah, emergency stuff on the side. Don't put everything in there, but you might want to be all right keeping most of them in there. The Easter Bunny needs eggs so he can deliver them. So he's going to have his basket pretty full.
Yeah.
Okay, wow. Okay, let's hear from Mizi. Mizi, what say you?
It's obviously he can't put everything in one basket, and also it depends on your risk appetite. But if the basket is real, you may put some concentrate on that basket, but look after it properly.
Oh,
EPF basket is you can never go wrong on EPF basket.
Yeah. It's the same like it's EPF. I believe it's the same class as US government bonds. Stable. Can't go wrong.
So what I learned, know the characteristics from each of your asset class. Okay, so go ahead and Google asset class is another huge topic. We don't have time to go for it. But yeah, I'm going to ask the third question. So there has been questions whether we should invest in gold. Gold actually just hit a very, oh my God, all-time high. I was told to invest in gold, but I just ignored it. Now it's over 3,000 USD. So what would be your view? Should we invest in gold when times are so volatile? I see this big thumbs up from Michael. Looks like you are.
Yes. Can I go back to 1982? Can I go back to 1982?
Yes, please.
1982, I had an ounce of gold, but somebody made me an offer and said, "Oh, what are you going to do with it?" And I said, "I don't know. I just got it in the drawer, but what are you going to do with it?" And I said, "I don't know." And they said, "Well, how about I buy it from you?" So I sold it to them. It cost me at that time $297 for an ounce of gold. Today, it is $3,232 today, and that is a 1,008% interest rate growth, 1,008 times. So, I probably was not so smart when somebody made me a little offer for gold, and I said, "Okay, I'll let it go," or whatever. Gold has proven to be a standard. You got it, lock it up, put it away, save it for a rainy day. It's going to grow. It's not going to go backwards.
I love this.
I just going to add another caveat to gold, right? So gold, despite its price appreciation potential, right? Gold is not income generation. So it does not give you a lot of distribution. Right. It does not give you dividends. It does not give you interest like any other investment securities. So if you want certain like investments that generate income to fund for your expenses or daily expenses, so possibly gold will not be a suitable investment, although it could have a long run potential in terms of your investments. Thank you.
Wow, all ladies out there, if you have some gold jewelries like earrings, bracelet, necklaces, or
your mom, your parents'
husband want to
heirloom.
buy you something, just tell them I want gold, okay?
Your parents' heirloom right now is worth a lot.
Yeah, and also for all the men out there, yes, you can request gold from your significant other. Okay, having said that, there are also some unit trusts and other investment related, I would say, that is related to gold investment, okay? So that's on gold, all right? Now, there's another question regarding an article that this person read. The first 3 years is the most important ages for starting businesses. Is this a good perspective? What is the key point? Okay, I guess this is related to starting a business. To make the business sustainable, usually the first 3 years is of absolute, I would say, significance. So of course, this question I'm gonna send it to Mizi. Mizi, you dealt a lot with the small, medium company and even startup. So what say you? Is it the first 3 years very important for any?
Oh, it's not the first 3 years. It's the start that is important. You can't wait.
Oh,
You do
wow.
not. You are a startup. You do not have that time, that runway of 3 years, unless your father or you are left with
Father, mother.
yeah, unless you are left with millions. But the most crucial part, I believe, in starting up a company is the first couple of months, because that's where you define who you are, who are your customer, what problem, what are you selling. If you are unable to answer those questions, give it 4 years, you still can't do that. You still can't. If you can't answer that question now, and you will still unable to answer the question another 3 years, and it will just go down to it. I've seen it so many companies doing that. They're just surviving day to day, and could not go further, because the first couple of months they could not answer what is the problem that I want to solve and who are my customers. Those are very basic fundamentals of starting up a business. I call it, if you don't do that, you are SS. In Malaysia, you got short sendiri, or in English, I'm in love with myself. So that's a huge issue. That's what I'm advocating.
No wonder.
What are you trying to solve?
The problem that the company, is going to solve, or the solution the company offers. And this brings me back to the aha. The aha theory that mentioned by Michael. I think a lot of times we just maybe take things for granted and thinking that time is on our side, especially for some of us who wants to be an entrepreneur, even starting to have this thought. It's so important to absolutely know what you're doing, respect time, do all your due diligence. I believe Michael certainly will have an add-on, given the fact that you've seen so many companies coming up and going down, right? Majority of the businesses, actually, they don't last.
Yep.
This is a sad fact, okay? Majority of companies, they don't last. They bankrupt within 1 year, 3 years, even a few months, right? So, Michael, what say you?
What say me? I say what John Maxwell says. If you're going to start a business, small business, doesn't medium, small, medium, or large, sit down with somebody who's knowledgeable in the field. Ask good questions. That's what Tharmizy's out talking about also. Ask that good question. If you cannot explain it to an 8-year-old, you don't understand it. And that's not my quote. That's a quote from Einstein. Okay. And some people make it wrong. They said, like when they hear his quote, they said, oh, he said, if you can't explain it, you don't understand it. But what the author wrote, what he actually said, what was really said was, if you cannot explain it to an 8-year-old, you don't have a good plan.
Yep.
You got to be able to explain it simply, but you got to have to start by asking good questions. What do I want from my business? 1 week from now, 1 year from now, 3 years from now, where do I want to be? And then how am I going to get that? How am I going to get the first customer to walk in the door and lay money on the table and buy my product or service? How am I going to get that first one? That should be your target. Don't worry about, I need to do this for a whole year. I need to do this for 100 customers. No, you want that first customer to walk in the door and make the purchase. You got the first one, then you can focus on the second one.
Wow. Do the first time right. Everything, get ready, and make sure you hit the bullseyes even at your very first attempt. So there's no room for error, especially when we're in the world of business. And that's why to me, joining Toastmasters is so important, because guess what? If you don't have a platform, you don't have a playground to test, are you going to hit it the very first time and get it right?
No.
I leave this question to all of you. Thank you so much to our awesome panelists. Now, I do have $1 million question now, and I'd like to hear from all the panelists. This question is so important because we believe in the world of investment, you can start small, you can start with a lot of money, but the important thing is how you make full use of the resources, the money you have right now. So here comes the question, and I believe this is a good question. Are you guys ready? Okay, I have to build this momentum a little bit, right? So that hopefully end of the session, you're going to apply what you learned today. The question is, I have 2,000 ringgit now. I want to invest more for my future. In the meantime, I need to pay my school fees. Should I buy gold in Bangkok and sell in June? Okay, this is a case study, real case study. I have 2,000 ringgit now. I'd like to pay some money for my school fees later in June. So what should I do with the money that I'm having now? Should I buy gold in Bangkok and sell it later in June? All right. Okay, I see Mizi is in deep thought. Because of this, Mizi, you go first.
Yeah, well, that's kind of interesting, because a lot of us face the same problem. But my suggestion, Muhammad said, you got only 2,000, and you've got something that you need to pay urgently, right? If you invest in gold, there will be fees, there will be broker's fees, there will be this fees, that fees, and then from your 2,000 investment, it will just shrink smaller and smaller. So my suggestion is pay the fees. Right, just pay the fees, because it's also an investment for yourself. Yep, that's it. Because 2,000 fees are too high.
Okay, thank you, Mizi. Thank you. Point of view from Mizi. Thank you, BK. How about you?
So basically, I would not suggest gold because it's too short term. So basically, I would suggest something much more safer, even placing it in deposits. I mean, don't be shy of doing a placement or investing in cash, because that cash yield does give certain returns. And maybe you could invest a little bit, right, to Michael's book, right, and look for self-improvement, right? So that's a way to go on how you're investing of 2,000 ringgit. And that way you will be able to pay your school fees as well as learning to self-improve yourself. Over to you, Michael.
That's a good one.
Wow. That's a good one.
Yeah, that's a good one.
Michael?
Well, if I had $2,000, or excuse me, 2,000 ringgits, first thing I would do was go get a haircut. And
Wow.
if you're a woman, maybe you want to go get a manicure. What I want you to do is I want you to put yourself in a positive mindset where you're feeling good about yourself. Feel good about yourself. You got 2,000 ringgits. Not everybody's got 2,000 ringgits. You got 2,000 ringgits. That's an accomplishment. Pat yourself on the back, you got 2,000. Now, how are you going to invest it? Go out and do something for yourself first, something small. Haircut might cost you 50 ringgits maybe, or something like that. Spend it. That's not going to, now you got what? You got 1,950, so you're all right. Then I would say you need to think about that school education. That's what made my choice. I would think about the school education and say, can you put it in the education? If you can go out and buy a 1/4 gram of gold, and it might cost you, I don't know, 500 ringgits or whatever it's going to cost you for a 1/4 gram. I'm not a 1/4 ounce, but a 1/4 gram. Go buy that little piece of 1/4 gram, and put it in your pocket or somewhere safe where you're going to have it forever, but get the school paid. I would say make yourself feel good first so you feel positive, pay the school, and if you got something left over, go buy a 1/4 gram. Believe me, a 1/4 gram of gold today, 10 years from now, going to be worth a hell of a lot more than it is right now. So it's an investment in your future.
Thank you so much. Thank you to all our 3 panelists. Certainly a lot of ideas keep coming in, but I want to thank all of you for being very, very eager to learn as well. So there it goes, the power of crisis investment. I hope all of you have some takeaway. So with this, our greatest gift to all of you is to go out there, learn as much as you can, Pick whatever that's making sense to you. And most importantly, keep yourself in that positive energy. Money will only come to you if you are positive, mark my word. And this is so important. And for us to keep being in that positive momentum, you need a community to hold you together, to let you lend a shoulder to cry on when you're not in that good mood, so that you can keep moving forward. And remember, opportunity will come to you when you are able to spot it, right? That's why we talk about crisis investment. With this, thank you so much for staying with us, and we love you so much. And because of this, yes, we are going to give you an investment framework later on, and hopefully you can add on your own value, you add on your own practice, and you add on your own principle. Once again, if there is the biggest takeaway now, I want to give to all of you, please hold on to the core value of Toastmasters. What is the core value of Toastmasters? Why it is going to make you a successful investor? What is the first letter? I, right? Integrity. And what is next?
Respect.
Respect. The third one?
Service.
Service. The final one?
Trust.
Excellence, right? So you have integrity because we are Toastmasters. We do everything right. We don't believe in get-rich scheme. Be very, very mindful of that. And don't get carried away. And of course, protect your loved ones, because the scammers are really great. They're professional, by the way, just to let you know. The second word, respect. Respect our own hard-earned money. Every ounce that we make, it comes with sweat and tears, right? So respect our own money, respect the money that we have, how little, how much, how big we have, we respect it, we use it with intelligence. The third one, we always want to serve people, especially to all business out there, to all our Toastmasters, especially our panelists that are here to serve us. They provide very generous knowledge to all of us so that we can profit financially. Last but not least, that's how you're going to reach excellence in your leadership so that you can build your community. You can be rich. I want all of you to be multi-millionaire and even billionaire so that we can spread the good news, the abundance to our community. Imagine if there's one day we all fly first class to travel the world together because money is no longer concerned. How great it is. Would you like to be a part of this journey? If you'd like to, give me a big thumbs up and turn on your video and we're going to let you go. But before that, imagine all of us are multi-billionaires and you're going to travel the world together, even go to Mars together with Elon Musk. Okay, on your screen, on everyone with your biggest smile. Yes.
Okay, 3, 2, 1. Just wait a moment for another.
Yes.
Another pose. 1,
yes.
2, 3. Okay, wonderful.
Thank you so much. With this, please stay back if you want to chat. Otherwise, tada, and go out there and make a lot of money and make your people happy, make your community happy. Most importantly, stay as a Toastmaster. Create a community that's full of abundance, happiness. We can travel the world together on first class, okay? How fascinating.
Thank
Good.
you so much.
Please stay back if you'd like to share. Okay, if you're still here, Albert, I'd like to hear a few words from you before you go. Okay, Albert is our charter. Actually, he's our father, okay? To make the cup manifest. He manifested the cup.
Man, the man.